All right, everybody. As you know, we only have taken sponsors for the podcast of products that we actually use. All right. Tax Help Software and ENQ. Okay. ENQ is what allows us to call the government and get into the IRS in under 3 minutes. Tax Help Software is what we use to pull transcripts. It's our intelligent ordering where we track what's going on with our clients overnight. So in the morning, we know if anything has happened on the IRS side. And also what we use for our resolution forms, our offers, installment agreements on collectible, powers of attorney, all of that. Okay. So if you want to go check them out, I will put the links below. If you were to show up at Green and Sklar's and wander around and follow me for a day, that's what we use. We use ENQ to call the government. We use Tax Help Software for basically everything else. Okay, so check them out. They help make this podcast work. And thanks for listening.
Hello, and thank you so much for joining the Tax Rep Network podcast. My name is Guinevere Moore. I am a tax controversy and tax litigation attorney in Chicago, Illinois. I represent taxpayers who have significant civil disputes or criminal disputes with the IRS. And I'd like to thank Eric Green for inviting me to join him in speaking with all of you with the Tax Rep Network. I'm excited to be here. Today, I'm going to be talking about what tax professionals need to know in order to respond to information document requests, as well as requests for taxpayer interview. This is a really critical part of representing taxpayers before the IRS, understanding what the IRS is looking for, what, as a professional, your ethical obligations are, and what are the best practices that we as professionals should be following in order to ensure that we are preserving our clients' rights in all ways possible. It's interesting when you think about representing a client in front of the IRS. There's a lot of different interests at play. First and foremost, of course, every client wants to be in a position to resolve their case at IRS exam level. I've never in my entire career had any client who said, I really hope we can't resolve this at exam, and I'm hoping we get to go to appeals. And then I hope we don't resolve it in appeals and we're able to go to court. No client ever says that. Taxpayers want to be able to resolve things at exam. And as much as it's our job to try as hard as we can ethically to resolve things at exam, we also have to keep in mind that not everything is going to be able to be resolved at exam. And on occasion, cases are either going to go to appeals or they're going to go to litigation or both. And it's important for representatives who assist clients in responding to IRS requests for information, as well as requests for interview, that we not only do everything that we can, as I said, ethically, to try to resolve the situation at IRS exam, but also that we are laying the proper foundation and laying the groundwork to set this client up for success in the event that the case does go to IRS appeals or does go to litigation, either in tax court or in district court. So with that in mind, I'd like to talk about the steps that we should all take when our clients receive an exam notice and you've got an information document request and request for an interview. So let's start with what is an information document request. An information document request is a document that the IRS sends the taxpayer requesting information. Typically, the IRS is requesting documents, or there may be something regarding, there may be questions that they want the taxpayer to provide a written response to. First of all, a couple of things to keep in mind regarding information document requests. Number one is Circular 230. Anytime you are representing a taxpayer before the IRS, I'm not talking about preparing a tax return. I'm talking about representing a taxpayer before the IRS. Practitioners' Circular 230 duties arise. What are those duties? There are several, but especially when it comes to IDR response, I think of Circular 230 10.22. A practitioner must exercise due diligence in preparing or assisting in the preparation of any tax return, document, affidavit, or other documents that are prepared relating to Internal Revenue Service matters. In determining the correctness of oral or written representations made by the practitioner to the IRS, and in determining the correctness of oral or written representations made by the practitioner to the client with regard to any matter administered by the IRS. So let's take a step back and think about, what does that mean? You, as the practitioner, when you receive an IDR, the onus is on you to exercise due diligence in making sure that whatever you prepare, whatever your client prepares, whatever is submitted to the IRS in response to an IDR is truthful, accurate, and complete. Now, there are 150 caveats to that, right? If you have objections, you should be raising those objections. If there's a way for you to respond to an IDR and provide some documents and hold some back without being false or misleading, certainly that's something that you should explore if providing documents to the IRS is going to put your client in a negative light, but only if you can do that in a way that does not fraudulently conceal or in some way obfuscate the truth from the IRS. Let's talk about what that looks like in practice. If you get an IDR asking for your client to produce bank statements for the last 6 months, and you look at the bank statements and you see that your client has been structuring, what does structuring mean? Structuring means your client goes to the bank and takes out $9,999 at a time in order to avoid having to fill out a cash transaction report. Well, that's a felony offense. You look at the bank statements, you think, oh my gosh, my client has been structuring. If we turn these bank statements over, the client is potentially going to be indicted for structuring. The client's this exam is now going to go criminal instead of being civil. You can't destroy the bank statements. You can't alter the bank statements, and you can't just refuse to turn them over. If you respond to the IDR in any way and you provide documents, whatever documents you provide have got to be truthful, accurate, and complete. So if you're going to provide bank statements, you can't doctor them. You can't have your client redacting out the structuring. You would have to provide the bank statements as they are. On the other hand, if you get an IDR that says, send me proof of payment to the insurance company that your client claimed as an expense on line X of whatever form, that's an entirely different request. You don't have to send over complete bank statements. Instead, what you can do is send over just the canceled check and the proof of insurance. So there's a difference between a request, providing more than is asked, and simply providing exactly what is asked. So that's one thing to keep in mind. And I'm going to revisit this bank statement issue a little bit later in the discussion about what do you do if the IRS did ask for complete bank statements and you see that sending them over is going to incriminate your client. So as you're gathering, if you get an IDR, your client gets an IDR, the first thing that you need to do, as I said, is consider what your Circular 230 obligations are and call your client, talk to your client about the IDR. You need to understand exactly what the IRS is asking for. Make sure that you and your client are on the same page about what is it that the IRS wants here. Make sure that your client and you agree about what it is that you have in your records and you're going to provide, and what the client has in the client's records, what the client is going to provide to you. And then you must review everything before you send it to the IRS, and you must keep a record of everything that is sent to the IRS. I can't tell you how many cases I have inherited from an accountant who, when I'm getting ready to take a case to trial, I have a taxpayer. The taxpayer is an individual. The general rule in tax court is that a notice of deficiency is presumed to be correct. The burden is on the taxpayer with regard to a tax deficiency to prove that the commissioner is wrong, not the other way around. However, Section 7491 of the Internal Revenue Code provides that a taxpayer may shift the burden of proof to the Internal Revenue Service if certain criteria are met. And one of those criteria, and this is the most important thing when you have any type of practitioner preparing IDR responses on behalf of a client, if the taxpayer fully cooperates in an IRS exam and other criteria are met, then the taxpayer may shift the burden of proof to the Internal Revenue Service. This is life-changing in terms of what can the taxpayer expect from a tax court trial for several reasons. First of all, if the taxpayer demonstrates compliance and cooperation at IRS exam, meaning the taxpayer has provided everything that has been requested at the IRS level, then first and foremost, there's no question that the tax court judge is going to consider the taxpayer's cooperation when it comes down to whether or not a penalty should be assessed. That's going to be part of the calculus. There's no case that says that, but tax court judges are human, and they consider the entire body of taxpayer behavior. That's one thing. Secondly, if a taxpayer can successfully argue cooperation at exam and show that the taxpayer provided everything to the IRS all along, and yet the IRS reached the wrong conclusion, then the taxpayer is able to put in evidence about what happened at IRS exam at trial. The general rule is that the court will not, they call it, look behind the notice. The court will not go behind the notice of deficiency and get into what happened at exam. Does this examiner have it out for the taxpayer? Did the examiner have an unreasonable point of view? Did the examiner make mistakes that he or she should not have made? And was it all an effort to try to harm this particular taxpayer or failure to give the taxpayer a fair shake. None of that is admissible. None of what happened at exam comes in to a tax court trial because the tax court says we do not go behind the notice. However, if a taxpayer has a legitimate argument that they would like to shift the burden of proof to the IRS under Section 7491, then all sorts of things about what happened at exam do properly come into evidence because the taxpayer is going to have to demonstrate compliance. The taxpayer is going to have to show that he or she did comply and provide everything that was requested at exam, unless the government concedes that the taxpayer fully cooperated, concedes that the taxpayer has the ability to shift the burden of proof. Now, there may be some cases where the IRS has agreed and conceded that the burden of proof shifts to the government on the underlying tax issues. I've never seen it happen. Quite frankly, I would be surprised if the government would agree to do that. And so what happens instead is that taxpayers are able to put in evidence showing compliance with all IRS requests for information. Again, this goes to overall evidence about who this taxpayer is. This is a taxpayer who's working to try to meet the obligations put on the taxpayer by the government. And that is evidence that the court will consider when trying to balance the different sides of the story. It's never going to be a slam dunk, but it's so critical for humanizing the taxpayer to the court and for demonstrating that this is the kind of taxpayer who tries to do the right thing. And so even if there isn't an agreement on the underlying tax, I think that it goes a long way in terms of working towards demonstrating efforts to comply. And that is very important for the question of penalty. So in that vein, when we think about preparing IDR responses, it is important that practitioners review everything before it is sent to the IRS and make sure that the taxpayer is, to the extent possible, complying and demonstrating compliance in order for a record to be established, so that in the event that we do have to go to appeals or we do have to go to tax court, it's clear that this was considered at exam and the taxpayer cooperated. Practically speaking, I have run into some problems when what happens is the taxpayer or the taxpayer's representative make records available for someone from exam to come and review, but no record is kept about what those records are. If you want to do something like say to exam, okay, come and sit in this room with the controller and you will be able to review all the source documents and everything that we have in this room. That's a very reasonable approach. Taxpayers shouldn't have to go through a massive time and expense to copy everything and base stamp everything every single time. But if that's what you choose to do, it's critically important that you, at a minimum, keep a record of what documents are kept in that room, what documents were in that room when the agent was there. This could be something like taking a picture of the binders that are in a room, getting a list of what's kept in the room and having a document signed between the taxpayer and the exam agent about what's available. And this is important both for switching the burden of proof under 7491 in tax court, and also for going to appeals. If a taxpayer is in appeals and says, I'm providing my mileage log, if exam was never provided the mileage log, appeals is not going to look at that mileage log for the first time on appeals. Appeals is going to say, this isn't ready, I'm sending it back to exam. And so it's critically important for practitioners to keep good records about everything that's being made available at exam, and to the extent possible, make sure that you are making everything available at exam that you're ever going to want to use later in the case. Because there's no question, if I come in as the attorney and I'm in tax court with this case, and I find the silver bullet that's going to save my client's case, if I want to put that piece of evidence in for the first time in tax court, I absolutely can. There's nothing preventing me from putting that evidence in. But what I can't do is put evidence in for the first time in tax court and also argue that the taxpayer fully cooperated in exam unless the piece of evidence that I want to put in is something that the IRS never ever asked for. And that's quite frankly just unlikely to happen. It could happen, but it's unlikely. Conversely, if you're at appeals and you find the silver bullet and you want to use a piece of evidence that you never put in an exam, you can certainly give it to appeals. But appeals is going to say, exam never considered this, we're not considering it. And they will either not consider it at all or send the entire case back down to exam. So when you're in exam, it's very important to try to review your files and provide as much information as possible that's going to be helpful. So moving on to what are the things, in addition to looking for documents, you're looking for important documents. Why is it important for the preparer to review everything that your client sends you to send to the IRS? We all know clients are cost sensitive. The client doesn't want to pay you to review things when they say, I know what's in my files. I'm giving you all of this. I just want you to send it on to the IRS. Again, I have inherited multiple cases from CPAs or other tax preparers who represent a client before the IRS who very understandably were trying to be responsive to the client's request for cost sensitivity on fees. The client prepares materials, sends over a bunch of materials. The preparer sends it to the IRS and prepares a beautiful letter saying, as you can see from the enclosed materials, XYZ, this is the outcome that you should reach. And then the IRS writes back and they say, not only did the documents you sent us not support what you said, but they directly contradict it. And what is this $75,000 deposit on such and such a day that's not reflected in the taxpayer's income, but is enclosed in the documents you sent me? I see it over and over, and I see it not because the preparer is sloppy, but because the preparer is responding to the client's request for cost sensitivity. Well, of course, nobody wants to be in that situation. And as a preparer, again, going back to Circular 230 10.22, the preparer has an obligation to determine the correctness of oral and written representations made by the practitioner to the IRS. we have to push back on our clients and explain to them that we cannot make representations until we have made some level of diligence as to accuracy inquiries. Do you have to scrub through your client's bank statements? No, you don't. But you certainly need to glance at them. You need to flip through things before you give it to the IRS. Of course, it's best if you can carefully review everything. But at a minimum, you've got to at least look through things to make sure that there's nothing in documents that you're providing to the IRS that conflicts with the overall story that your client has been telling you and that you in turn have been telling to the IRS. Another important general rule of thumb that I like to keep in mind when responding to information document requests is when you receive an information document request, I fill out my response right away and I actively mirror the IDR. So if the IDR says, number one, provide all tax returns for 2012 through 2017, I will type that out, and then below it, I say answer. Tax returns for 2000 and X through 2000 and Y are included. The tax return for the first year that you requested, the taxpayer no longer has on file. Please let me know if you are unable to locate it, if we will continue our search. Why do you want to do that? Again, it's important to make a very clear record as to everything that the IRS has requested and everything that your client has provided. In the cases that I have taken through from exam to trial, or that I have taken to trial where the prior representative has done an excellent job of laying the foundation in an IDR response to prove cooperation, to prove that each and everything that the IRS has requested was provided. Those are the cases that settle before a full trial, and they settle favorably to the taxpayer because it's easy for the client to prove that every single thing that was requested was provided. And it's also very easy for a practitioner to go back on the substantive issue and say, okay, on this substantive issue, we've got no question that we have substantiated $150,000 worth of expenses, or whatever the case may be. It's important to lay every single thing that the IRS is asking for out in a very clear record, as well as everything that the client is providing. Lay that out in a very clear record. So now we get to the question of objections. What do you do if the IRS asks for something from your client and you can't provide it because doing so would incriminate your client? First of all, if you are representing a client in an IRS audit and there is even a hint of worry that turning over records or taxpayer compliance with an IRS request would lead to a referral to IRS CI as opposed to IRS civil, that is absolutely the time to pick up the phone and call someone like me or another criminal tax attorney who can help your client. That's first and foremost. However, I have had many representatives say to me, well, okay, fine, but if I don't provide the bank statements, say these bank statements show structuring, say the bank statements would show illegal activity. If I don't provide these bank statements, then the IRS is going to summons them, and the taxpayer is going to be in just the same position because they're going to be, the IRS is going to get the records anyway. You're right. It's true. The IRS, if the IRS is looking for bank statements or any other kind of record that the IRS can get from a third party, and if your client is asked for that information and does not provide it, absolutely, the IRS is going to summons it, but it isn't the same impact for the taxpayer. It's not the same impact for the taxpayer because taxpayers, everybody in this country, has a Fifth Amendment right not to incriminate themselves. And when you have records being turned over by the taxpayer may be waiving important Fifth Amendment rights. It is not the job of anyone other than experienced criminal tax counsel to decide whether or not records that are incriminating should be turned over to the IRS. If you're even thinking about that and you're even having that conversation, it's time to make sure that your client has criminal tax counsel who can take over. Absent that, absent considerations about incrimination, any request for a record should probably be turned over unless it's privileged. What are potential privileges that would prevent your client from turning a record over? Most obvious would be attorney-client privilege. It's unlikely, however, that accountants are going to be in possession of documents that are protected by attorney-client privilege. Your client, however, might be. Is the client going to send the records that are protected by attorney-client privilege to the accountant and then have the accountant prepare a privilege log and send that to the IRS? No, absolutely not. What the accountant should do is work with the attorney to prepare a proper response that says something to the effect of, we are providing all non-privileged responsive documents that the taxpayer has in his or her possession. That way, you're laying the foundation for both what you are including as well as what you are not including. IRS IDRs do not request privilege logs. So if the IRS wants a privilege log, they will ask for one, and they will ask for one. They know how to ask for one. It's not something that any typical preparer or someone who represents taxpayers by preparing returns or practicing before the IRS, who is not an attorney, would normally have to do. I do have one more word of caution, however, about IDRs and IDR responses in terms of what should you be providing. I often see the IRS asking taxpayers to create documents that do not already exist. This is not something that should ever be done lightly. The IRS, there are many cases that say the IRS does not have a right to require a taxpayer to create a record that does not otherwise exist in summons enforcement. If the IRS does not have the right to do something in a summons enforcement scenario, they certainly don't have the right to do it in an information document request scenario. So what are the kinds of things that the IRS can ask for, that they would ask someone to create that didn't already exist? I've seen IDRs that ask a taxpayer to prepare and sign a statement under penalty of perjury explaining why executive compensation agreed to was fair and met all guidelines. There is no way that I would ever allow my client to prepare or sign something like that. The IRS can't require that in summons enforcement. They're definitely not getting it in an IDR response. I'm happy as the professional to provide my legal analysis as to why executive compensation was appropriate. I'm happy to provide any supporting documents that exist as far as how the amount of compensation was determined, who agreed to it, when, where, how, why. But what I'm not going to do is allow my client to create some brand new document and sign it under penalty of perjury when there's no requirement to do so. Conversely, let's say you have a trucker and the IRS is asking for a mileage log, and the trucker has a mileage log, but there are certain parts of the mileage log that he didn't fill in when he was supposed to, but he has other things such as a calendar that will allow him to reconstruct parts of the log. I believe the appropriate course of action in that situation is to include the mileage log that was originally created and supplement it with the additional information based on the extraneous information. Explain that the document is being supplemented and provide that to the IRS. The difference is in providing something like a mileage log that's being supplemented, the taxpayer is not signing it under penalty of perjury, and you are providing information that the taxpayer contemporaneously was supposed to have and did have, but just didn't have it in the format that the IRS asked for. It is not the same as asking for a post hoc in-depth analysis as to why the position taken on the tax return is correct. So those are some of the things to keep in mind when considering whether you're going to have your taxpayer go ahead and create new documents or not. The general rule for me is I don't like creating new documents. My client's not required to do it. I really prefer not to. However, if doing so is going to help my client, and I think that it's going to lead to resolving this matter at exam, and they're not doing anything that's going to potentially open up further trouble for them, I'm going to let them do it. And I'm going to work with them under my Circular 230 obligations to make sure that we are exercising diligence as to accuracy. So what are the other obligations under Circular 230 that practitioners need to keep in mind? 10.23. This is my least favorite provision of Circular 230. A practitioner may not unreasonably delay the prompt disposition of any matter before the Internal Revenue Service. This does not mean that we can never ask for extensions. It doesn't mean that we can't reasonably work with the IRS in order to extend a deadline so that the client can gather the information needed to respond to the exam. But what you can't do is intentionally slow play something, trying to run out the statute of limitations, or slow play something to try to get the IRS to back off. That is the violation of Circular 230. The other important thing to keep in mind in IDR responses is 10.34, standards with respect to tax returns, documents, affidavits, other papers. So it is our obligation as practitioners to make sure that the positions that our clients are taking have foundation in fact and in law. We may not provide something that is frivolous, that contains or omits information in a manner that demonstrates intentional disregard of a rule or creates an intentional false impression. And finally, if we are advising a client to take a position, the client is entitled to rely on our advice, and we, on the other hand, are entitled to believe our client. We are allowed to believe that our client is telling us the truth. But what we cannot do is ignore implications of information that our client sends to us, ignore something that we actually know, and we must make reasonable inquiries if the information that our clients give us is correct before we send it to the IRS. You know, you cannot bury your head in the sand, just like our clients can't bury their head in the sand. We cannot bury our head in the sand as practitioners as to whether our client is telling us the truth. Finally, let's talk briefly about requests for taxpayer interview. If the IRS wants to interview your client, and again, if you have the slightest hint that there are Fifth Amendment considerations, this is the time to pick up the phone and call experienced criminal tax counsel. The other thing to think about is whether it's possible to get a list of the questions ahead of time. Most agents will be fairly upfront with you about what it is that they want to talk to your client about. Absolutely, if you're going to submit a taxpayer for an interview, it's critically important that the taxpayer is prepared. The taxpayer understands he or she has to tell the truth, but must also be prepared so that there's a way that he or she can give the information that the IRS is looking for without making this case any worse than it otherwise would be. There is a provision under Section 7521 that provides for taxpayer interviews to be recorded. This would involve getting a court reporter to come and make a transcript of the taxpayer interview. Doing this is absolutely going to raise the temperature of the exam, and it's not something that I ever exercise lightly. But there are times when it would be foolish not to have the interview recorded. Even if you choose not to have an interview recorded, if you produce your client for an IRS interview, you've got to have another professional there whose job it is just to take very careful notes, because you cannot be both the professional who's listening to make sure that you're jumping in and advocating for your client and with your head down taking notes in a notebook. There should always be two people, one who's listening and making sure that you're the quarterback for the client, and one who's taking notes and making a good record of everything that happened. The other thing that I like to do after either completing an IDR response or sending a taxpayer for an interview is follow up with the IRS and say, based on X, Y, and Z, it's my understanding that we've now responded to all of your concerns and we're done. I'll be expecting to hear back from you within 14 days. Please let me know if this is not correct. Again, laying a foundation, laying the groundwork to show that the taxpayer's done everything to comply. And to the extent that there's questions, the taxpayer is open to hearing what these questions are and responding to them. But we think that the ball is in your court, IRS. And doing that will also signal to the exam agent that this is not a taxpayer who's trying to avoid or circumvent cooperation. This is a taxpayer who wants to cooperate. Well, thank you very much for listening today. If anybody has any questions, you can certainly reach me at my email, which is guinevere.moore@mooretaxlawgroup.com. Or you can check out my website, mooretaxlawgroup.com. And once again, I'd like to thank my friend Eric for getting me involved with the Tax Rep Network. Thanks and have a great day.